Chamber's second EDC webinar, Your CARES Act and Payroll Protection Program, Questions and Answers. We are pleased to have a panel of industry experts joining us today to answer your questions concerning the CARES Act and the Payroll Protection Plan. Before we begin, I'd like to introduce our moderator and panelists. Ed Dwyer will moderate our panel and field your questions to the panelists following the presentation. An experienced banker with a passion for leadership development, Ed brings more than 30 years of industry experience to our conversation today. On our panel, we are honored to have Louise Anderson, a partner with Carr, Ingram CPAs and advisors. With more than 35 years of experience as an accounting and tax professional, she provides consulting and tax services to business clients and individual clients in the Northeast Florida area, including St. John's, Palatka, and Gainesville. I'm also pleased to introduce Jennifer Howard, a senior tax manager with Carr, and Ingram. Jennifer has more than 20 years of combined experience in public accounting and industry. Her areas of concentration include tax planning strategies and business consulting for physicians, dentists, and hotels. Finally, I would like to introduce Cecil Gibson, Market President for Ameris Bank in St. Augustine, a second-generation banker serving in the banking and financial services industry for over 42 years. Cecil is responsible for all core banking business in the St. Augustine market, including St. John's, Putnam, Flagler, and Volusia counties. Thank you, Ed, Louise, Jennifer, and Cecil for being here with us today and sharing your expertise and practical knowledge. Now I'd like to hand the program over to our moderator, Ed Dwyer, to start the discussion.
All right, thank you, Mike. Welcome, everybody, and thanks to the Chamber and the Economic Development Committee for hosting these calls. This is the second one. We had one last Friday, and I'm sure many of you out there who've dialed in are likely small business owners, and you're trying to figure out how to navigate this incredibly unique and to some degree, perhaps a little frustrating out of the gate. So we're here to answer your questions, and we'll start out with just making some general points. And to that point, I'll just mention that having, as Mike indicated, I was a banker for 30 years, and I live here in St. Augustine, and I am also a small business owner, starting up a business about a year and a half ago. So I'm in the teeth of seeing the impact of all of this. But I'm also involved through my company through many of the banking associations at the national level. So I have a very close connection to all of what's going on within the CARES Act. And just so you all recognize, that this has really been a truly remarkable time in our country, unprecedented in the sense of what we're dealing with the virus, but also the CARES Act that was approved just a couple of weeks ago. And to think about the concept of a $2 trillion stimulus package, of which $350 billion has been dedicated to this Paycheck Protection Program. Congress is already contemplating and discussed this week adding another $250 billion to make it $600 billion in the near future. And to take the SBA, Small Business Administration, and the Department of Treasury to try to operationalize a public-private partnership whereby the banks are the front to the customers and business owners in the community to navigate the system through the SBA and funding out back through the bank again has never been done in our country. And we're trying to do it in a matter of just less than 2 weeks. And so be patient is one thing I guess I would say. And hopefully today, some of your anxiousness around this, we can provide you some good answers. But do recognize that much has happened. Even though the program started last Friday, the banks didn't have information relative to what to use for a promissory note, how to actually do the funding. All of those issues and particulars are being worked out. Please don't take it out on your banks because they're trying to do all they can to take care of you as their customers. But recognize literally everyone is working around the clock within the government, within the banking industry, CPAs like we have in a call, your attorneys. It truly is all hands on deck because the purpose of this stimulus package was to make sure that during this economic shutdown because of a virus, the businesses don't fail. That this is an 8-week funding for payroll and other critical requirements like rent and utilities and whatnot is to keep you afloat. And granted, we need to get the money out the door as quickly as possible. And I think once everybody starts to figure this out and how the banks and the SBA are working together, that it really will be like a hose, and the spigot will become wide open, and we'll start to see funding coming out to all of you. And so with that, I'll start to turn things over to the panelists, and knowing that many of you may have submitted questions to Kathy Newman, the Economic Development Manager for the Chamber. So she has consolidated those. We have those questions. And so we'll endeavor to incorporate those into some of the opening comments. Well, I will then touch on some of those questions as we move forward. If you're interested in asking additional questions, there is a chat function at the bottom of your screen if you've dialed in online, and we will field those chat questions as we go along as time allows. We will end no later than 1 o'clock. And so I believe with that, I'm going to turn things over to Louise Anderson to start us out. Take it away, Louise.
Thanks, Ed. So my name is Louise Anderson. I'm a tax partner here at Carr, and Ingram. CRI is a large regional firm in the Southeast, and we've had an office here in St. Augustine for a little over 15 years now. And I want to thank everybody for participating. This has been a chaotic week or so for all of us. So thanks for taking the time out to try to figure out more things about this. I'm sure we've all had a storm of emails, text messages, neighbor phone calls about the CARES Act, and particularly about the PPP loans, and it's been just overwhelming for all of us. We have a lot of resources at our firm that are helping us through it. Hopefully we'll pass those resources along to you today to help you through it. I think most of today's call is going to be spent talking about the PPP program, the Payroll Protection Program, and the Economic Injury Disaster Loan, sometimes referred to as EIDL. Those are the two most immediate relief for businesses today. Both of these programs are governed by the SBA, but you apply for the PPP at your local bank. And as I talked about earlier, this is all very new. So it's been put together very quickly, and there are still a lot of questions that need to be asked and clarified. Self-employed people are supposed to be able to apply for the PPP today, but as of about 9 o'clock this morning, there was still no guidance from the Treasury on what that application process should include. What is self-employment income? How is a loan is going to be forgiven? What is the basis for the forgiveness? None of that's out there yet. That as of 9 o'clock this morning anyway. So I kind of want to reiterate what Ed said. It's still a lot of confusion. We're going to tell you what we know as of this moment in time, but I think all three of us on the panel would say a lot of what we're saying now is different than it was 3 days ago, or sometimes even 2 days ago. So the information is current as of this moment in time. While everybody's been talking about the PPP and the EIDL, there is still an awful lot of things that are available in the CARES package for maybe a little bit later in the day where we're past the initial emergency, but there are some tax credits, some tax breaks that are offered to employers or about retirement plans. There's lots of other things that are available in this act besides this program. We'll try to get to some of that as we go along. Jennifer?
Thank you, Louise. My name is Jennifer Howard, and I am a CPA here at Carr, Ingram. I'm really excited to talk to everybody today and give you some very insightful information on, as Louise stated, what we currently know to kind of help you all get through this trying and difficult times. There are a number of benefits and strategies available to both individuals and companies on the CARE Act. And I just wanted to give you a brief overview of the items that we have found to be particularly the most useful for our clients. In regards to, they obviously are the PPP and the EIDL loan, which we'll go into great detail here in the Q&A. But there's also something called the Employee Retention Credit. This is a refundable tax credit that is going to refund you for only 50% of the wages that you are paying. Please be really careful with this credit. If you use the PPP funds to pay for your wages, you are not allowed to take the employee retention credit. I think there's been a lot of discussions about this, and people are getting confused that if you take the PPP funds, you can't take the idle funds, and that's not the case whatsoever. It's if you take the PPP funds, you cannot also apply for the employee retention credit. And the employee retention credit is calculated on the payroll forms 941s. So your payroll processor should be able to help you with that and ask you questions about whether or not you've received PPP funds. I'd also like to talk to you about some tax provision changes, more specifically the ones that were not widely publicized. Louise touched on it briefly, the retirement plan withdrawals. The IRS is waiving currently the 10% withdrawal penalty on your retirement accounts up to $100,000. So if you need cash right away and you're going to go ahead and pull money out of your retirement account, they're going to waive that 10% penalty, early penalty right now. And they're also not going to include it as income on your tax return. But the caveat to that is if you pay back that money into your retirement account over the next 3 years. So that's kind of a good way to get some money if you need something right away. Also in regards to the retirement accounts, they have doubled the amounts of the loans that you can take against your retirement account. They've upped it from $50,000 up to $100,000 that you could borrow against your retirement account. So this is a great alternative if you need cash right away, but I would advise you to contact your financial advisor to discuss which of these options is best for you. And then lastly, I wanted to talk about net operating losses. If you have a net operating loss, there is an election now that you can carry this loss back 5 years and get a refund on that. I think there's going to be quite a bit of losses in the year 2020 that we're going to be able to have carried back, and you'll be able to receive a refund on your tax return. So please just write that down and talk to your tax advisor in regards to those tax provisions. And then I also want to steer you in that our firm has some very valuable resources on our webpage. And if you go to CRICPA.com and you click on the COVID resources, there you can watch pre-recorded updates that we're rolling out to our clients discussing each of these topics in greater details. And if you click on the COVID resources, on the right-hand side, there's another link that states visit past quick links and slides. Just be cautious that some of that data might be old and outdated. I would look at the more current information. We try to keep that updated so anything that is outdated isn't in there anymore, but I would look at the most recent information. And with that, I'm going to pass it on over to Cecil.
All right, so the Payment Protection Act, the actual plan for the Payment Protection Act, is available to businesses and our nonprofits with up to 500 employees. You don't have to be a customer of the bank that you apply for, but I can encourage you that you should be applying with your own bank first. That is going to be the quickest entry into the program. I know a lot of banks are limiting participation, and some banks have already filled their buckets, but to the extent that you can apply through your own bank, that's the quickest route for you guys. You can receive both a PPP loan and an EDL loan, which is a financial hardship loan. It's a disaster loan that we're not going to talk a lot about today unless we have some questions, but you can apply for both of those. What you can't do is you can't have an EDL loan with the emergency $10,000 grant and a PPP loan at the same time, nor can you have a PPP loan and an EDL loan that cover payroll. You have to pick payroll in the PPP plan and then use the EDL loan for other items in your company that you need funding and financing for. The program allows you to borrow up to $10 million. In the week that we have been working on these things, I think the biggest loan that I've seen is about $6 million, and the smallest loan I've seen is probably about $9,500. So the loans cover a broad spectrum, and all customers are getting in. It is set up to be a first come first serve loan, and so the folks that have gotten in early are probably getting handled, while if you applied Monday, Tuesday, Wednesday of this week, it's probable that your bank has got you in queue, but they're working the loans that came in front. And that's kind of the way the program was set up. You're allowed to cover wages, salaries, tips, group healthcare benefits, your health insurance premiums, retirement contributions, and the covered medical and family leaves that you would have for anybody with a salary up to $100,000. Salaries that are over 100, you have to adjust, and you have to cap the costs that you're applying for at $100,000. The loan is a very low interest rate. It's a 1% loan, and the SBA is charging no fees. There's no prepayment penalties. They are not requiring any collateral, and they are not requiring personal guarantees. And that's either a profit or a nonprofit company. The loan has a repayment period of 2 years. So you may borrow this money. As many of you know, this loan is forgivable. If within the 8-week period after you borrow the money, you become eligible for forgiveness if you have spent at least 75% of the loan proceeds in payroll costs. The other 25% can be spent covering mortgage interest or lease payments, rent, utility payments, those things that were incurred after February 15th. And the loan would be forgiven. You'll submit documentation at the end. The loan will be forgiven. And then a balance that's left over that was unforgiven, you have 2 years to pay it off. The paperwork and the documentation is very easy. Depending on which bank you're applying with, every bank's going to have some minor modifications to what they're requiring, but essentially you need an application which the bank will supply you. You need to do a calculation of the reimbursable costs, and most of us have a checklist or a loan calculator right on our applications for you. You need to submit supporting documentation for the payroll costs, usually in the form of your 941s for the last year. You can submit, if you're on payroll service, you can submit payroll summary reports directly from the payroll service if they handle those for you. And if you don't use either of those, you can actually submit internally prepared documentation for your payroll expenses out of your general journals. The banks will test the amounts that you're asking for reasonableness. And what that means is the bank is going to go in and make sure that the amount that you're asking for is closely substantiated by the documentation that you provide in the application package. So if you're applying for a $1 million loan and your 941s and your healthcare costs and your 401ks total up to $990,000, that's going to pass the reasonableness test. If your documentation turns out to be $500 for $1 million, there's going to be some questions. The bank is not going to validate that. The SBA has put that responsibility on the borrowers to be able to substantiate and validate. And so that's the generals. You're going to need, for a lot of this has come up, I'll tell you what's come up this week, bylaws. You are required to submit bylaws. Many small businesses, many LLCs and many small businesses that are 100% owned by an individual never went to put bylaws together. The SBA is going to require bylaws because that's the controlling documents on your company. So operating agreements or bylaws are going to be essential. If you have them, you'll need to submit them. It'll make it quicker. If you don't have them, you probably need to work to getting some drafted up, some simple ones drafted up, so you've got a controlling document. That's what I've seen so far in the processing this week. So I can now turn it back over to Mike and or to Ed, I'm sorry, and we'll continue.
Cecil, maybe talk a little bit more about what the borrower needs to submit relative to payroll. We obviously live in a very tourist-driven economy here, right? And that there's seasonality. And so see a lot of questions around people wondering what exactly they need to submit as it relates to payroll. And I see within the guidance there is flexibility there, right? That if someone has a pretty stable business, they could probably just provide their payroll records over the last year. Or if you have a very heavy spring break, which we wish we would have had, talk a little bit about that, right? That there's some flexibilities of what the applicants can submit.
Right. So, I mean, you can submit. They've left it fairly wide open. Again, I reiterate what I said a minute ago. The banks are only required to validate or check for reasonableness. You've got to be able to look the government in the eye and say what you borrowed is what you spent or what you needed. So any kind of documentation, if you have a seasonal business where, let's say if you're turning in 4 quarters of 941s, you will pick up the seasonality in those 941s. In the 941s that I've looked at with folks here in St. Augustine, you clearly see that. You see that first and second quarter being most of the times bigger than the third quarter, down a little bit, and then the fourth quarter up, particularly for our retail clients because of the seasonality. But the 941s show that out. Your internal payroll summaries, if you're not on a system, all you've got to do is go to your payroll ledger, print your payroll ledger out, and submit it. The SBA is not being real tough and a real stickler on this. They just want to know that if you're applying for money for payroll purposes, that there is a track, there is a checkoff where you actually have spent that money in the past to be able to validate what you will spend for these next 8 weeks. Does that help, Ed?
I believe it does. It does show that there is flexibility, but again, the reasonableness factor is really a key point.
Key point.
Great. See a question popped up out of this program. Are payments to subcontractors, 1099s, considered payroll? Check me on this, panelist, but I believe the answer is no.
That is correct. And let me address that, and I'm sure that Louise can substantiate it, but I'll give you a prime example of one I just did yesterday. I had a pretty large request come across my desk. They had included contract labor in their payroll as part of their payroll. The justification being that the individuals or that the contractor that they hired provided staffing for their company that is essential for their company to continue to work. What you have to remember when you're paying a contractor, particularly somebody supplying labor, is that that contractor has negotiated with you, the business person, for a set price for their services. And let's say they've contracted for $15 an hour per person that they are working with you on. They're paying their employees $10 an hour. So the payroll cost, the liability or the payroll expense really sits with that 1099 contractor who is employing those people to be in the labor pool that they're supplying to your company. That's the easiest way for me to explain it. So you can't count the 1099s because what you're paying that contractor is a business transaction, not a pure payroll transaction. Ladies, did I cover that, or can you embellish that?
Well, I think also we have a lot of small businesses that may use like an independent, basically self-employed subcontract. So that they may have one person only that they're working with. again, you still cannot include that 1099 as part of your payroll calculation if you're using such a person, because they as an individual can apply for their own PPP loan based on their own earnings. So both can't do it at the same time. So if you're using like an individual and you're paying them with cash and you're giving them a 1099 at the end of the year, they have to apply for the PPP on that earnings on their name. You apply for your employees. Does that make sense?
Good clarification, Louise. Yes, that makes a lot of sense. And I'm sure that's why there was the decision to add contractors and self-employed people to the program, because they were not being counted in the payroll, which makes complete sense.
That's correct. And we have a lot of small businesses that kind of either seasonally or particularly seasonally will use 1099 contractors for that time and not treat them as employees. And so I guess this is kind of a downside to that treatment now. Hopefully this doesn't happen very often.
So let's stay with you, Louise and Jennifer. See a number of questions that have to do with businesses that went ahead and furloughed employees right out of the gate, right? Probably a restaurant or a bar or any other retailer that was shut down as a result of the state or the city edict. So talk about what they could do as they apply for PPP relative to, because the whole intent of the PPP program is to keep your employees on their payroll, even if they're not working, to keep them off unemployment, to keep them kind of, within the employment of the company, so that when we do things open back up, then everybody comes back to work. But there's a lot of questions around how that works. Can you, do you hire back previously fired employees? Can you touch on all those aspects?
Yes. You can still apply for the PPP loan even if you've placed some employees on furlough and or fired them. However, the forgiveness portion of the loan does state that the portion that's not used for payroll per the calculation is not forgivable, will become a loan. And when you do hire back these employees, there's a covered period. And so you have 8 weeks from the point that you receive the funding, the loan proceeds of this. You have an 8-week period that begins on the day that you receive that funding to have hire back your employees and pay them. And that covered period can begin as early as February 15th, but it ends on June 30th. So that's kind of the ramifications of the PPP loans and the furloughed employees.
There's also been questions about whether, because you've laid off people or had to close the doors, does that, the fact that you have a loss, does that impact the loan? And there is the entity itself, the business itself, doesn't have to show either profits or losses. The whole PPP program is based on payroll and payroll only.
So Louise, to follow up on that, I see a question. So obviously, the shutdown happened a couple weeks ago. Business owners have been paying, perhaps they've been paying some employees out of pocket anyway. So they'll be able to really reimburse themselves through the proceeds of the PPP loan, because it really is covering an 8-week period, correct?
Maybe. So there's a couple things here that play together. There's also the employee retention credit that's available. And so if you have paid your employees, although you've had to lay them, you continue to pay your employees, although there's been a significant decline in your business or you've had to close your doors because of the coronavirus. And there's a tax credit for the taxes that you pay to those people, or the employer Social Security taxes for those wages. But you can't do both. Their whole double dipping thing, they really try to avoid that. So if you get the credit, you can't necessarily use that payroll for the PPP program. So you really have to kind of look at that whole picture.
Got it.
Did I say that right, Jennifer?
Yes, yeah, I do believe so. I do want to say that, you know, the rules specifically do state that the company must use 75% of the PPP funds for payroll during that 8-week period. So if you don't use the 75% for payroll, that portion, that amount that is not paid for payroll, that's under the 75%, that will become a loan at a 1% interest rate with a 2-year term. And you can use the funds from the EIDL loan to pay back the PPP loan portion. But you just need to make sure that 75% of the PPP proceeds are paid for payroll during that 8-week period.
And the remainder 25% has to be spent on rent, utilities, or mortgage interest.
That's correct.
Yeah, that's the critical piece of the forgiveness aspect to it, right? Is that you've got to use these proceeds for 75% payroll. The rest can be rent, utilities, and whatnot. But I'm sure documentation, and again, Cecil, maybe back to you. This is looking further down the road, and I realize you maybe haven't even needed to cross this bridge yet, but it's got to be about documentation and in terms of how business owners using these proceeds to make sure that they get the full benefit of the forgiveness, and that it doesn't then convert to the remaining piece to a loan.
Ed, yeah, that's correct. While we haven't seen the final guidance, the indication is that when it's time to seek forgiveness, the businesses are going to be asked to supply similar documentation for the pay periods involved in the PPP to justify what they have actually spent in payroll costs. The SBA is then going to look at those documents and determine how much of that loan amount will be forgiven. It's our understanding right now, and somebody correct me if I'm misspeaking on it, it's my understanding right now that if you can prove 75% of the total loan was used for payroll, then that whole loan can be forgivable. But
I'm not sure it's going to be quite complete. There's 2 other factors with payroll. Not only do you have to have your total dollars, but you have to maintain the same number of FTEs, and you cannot have I think more than 25% pay cut to an individual. Jennifer, do you remember that number?
Yes, you're correct. 25% pay cut.
So it's not total gross. It's also number of people and pay per person. So again, we haven't actually seen how this is all going to work, but those are the qualifications that are out there. And the other 25% has to only be spent on the rent, utilities, or mortgage interest, not principal, just interest.
And to that point too, Louise, just to add on that, I see a couple questions where, so when you said FTE, full-time equivalent, say you have 10 FTE before, say somebody out of that FTE group was a person that just decided, I didn't really need this job, I'm not going to come back, but they find somebody else to replace that person with, and so they still have 10 FTE. It doesn't matter who the people are, it just has to be the same number of employees, correct?
That's my understanding, but like in our business, we pay our more experienced people less than we pay our less experienced people, as I'm sure most people do. So what if we had like one of our senior people leave and we hired in a junior person at a lower rate? I don't know what that's going to do. We just
right.
Is that
you're making the distinction of the total payroll cost versus the FTE, but I think if you just went equivalent amount of pay, I'm seeing where I could see how this would be, right? Somebody might have quit and just decided, I don't need to come back. So they don't want to have that person's decision affect the ability to be forgiven, and they can hire someone else to fill that FTE quota.
That is the point of this, yes.
Yes, that makes sense.
3 days, whoever it was. But there is that thing in there about reducing wages.
Right.
Ed, real quick, I just wanted to point out, I had a question that I want to make sure I touched base on. And the question was in regards to guaranteed payments instead of a paycheck for a partner who's not considered an employee. Would I qualify for payroll? The guidance is not super clear on this. The PPP application from the SBA doesn't address partners who are receiving guaranteed payments. So we kind of have to dig further into the law, and the definition of who's considered to be a self-employed individual ultimately references the income tax regulation codes that address self-employed tax. Therefore, we kind of are grouping guaranteed payment receiving partners in that they're self-employed individuals. Therefore, we're advising them to work with the lenders under the individual portion rather than trying to do it at the business level. But it's going to be based off of your SBA lender and how they want to go about it. So I would definitely have that discussion with your loan officer making those decisions.
Well, let me take that. Maybe it's saying the same thing, but I see a few questions here. One, we have probably the most unfortunate of stories, a business that kicked off in the chamber, did a ribbon cutting on March 4th, literally 2 weeks before all of this hit the wall. And I see other people, heck, I think of myself, where you're truly a small business in the realm of a husband and wife. They own a company. They are the employees. They don't have other employees. They do everything. And so they're not paying themselves through payroll. They're paid themselves when they have liquidity and they make a distribution to themselves. What are their options in this environment?
Unfortunately, under the PPP rules, because they're not paying themselves on payroll, if they're paying themselves through distributions, they're not going to get any portion of the PPP loan proceeds because that specific loan is to reimburse for payroll. So anybody who's receiving W-2s or self-employed individuals, which is under this guidance here, they could apply that way. If they're paying themselves through distributions on an S corporation, I guess I would talk to their lender to see if they would categorize them as self-employed and therefore going through this round, but we haven't received what the new rules are going to be under the self-employed applications. So we don't know if those type of income recipients are going to qualify. So until we see those regulations and those instructions, there's not really a lot that we can offer for those type of payers.
So how about within the economic injury disaster loan program, though? Would that be something that folks like that could apply for?
Ed, this is Cecil. Yeah, that would be the way probably to go. There is an immediate $10,000 grant that you can get that is forgivable in the EDL loan. And that EDL loan is there to be able to pick up the costs and expenses and the operating capital and things like that for a business that's been affected that is outside of their payroll. And that loan goes up to $2 million. It is directly funded by the SBA, by the U.S. Treasury, but it is more of a traditional loan product as opposed to a forgivable loan. The $10,000 in that is the only forgivable portion, and the remainder of the loan is put on a term of up to 30 years, and for nonprofits, it's a 2.75 interest rate, and for-profit businesses, it's a 3.75. But that SBA is going to look for collateral. It's going to look for personal guarantees. So it is going to be more like a traditional loan, and just a very small portion of that, the front end of it, is forgivable.
And just to piggyback on that forgivable portion, the $10,000 grant on the EIDL loan is what we're talking about specifically. The SBA recently released an email bulletin 2 days ago that the advances of the $10,000 are going to require $1,000 per full-time equivalent employee, up to $10,000. So if an employer has put in for this EIDL loan and they do not have employees, they're not going to have this $10,000 portion be considered a grant and be free. So, you know, and that's just a new recent email bulletin that's coming out right now. So if you are an employer, you've filed for this EIDL loan and you have 8 employees, you are going to only receive up to $8,000 of that grant, so to speak, of the portion of this that will be considered a grant, which is forgivable.
So once again, the rules change as we go along. It's very, very difficult. And it's
yeah, everybody needs to understand that the SBA has up to 30 days before what they call the final guidance becomes final. They can change this for 30 days. So the folks that are on the call, don't be surprised if your lender, even after you've closed the loan, comes back to you and asks for additional information or needs additional documentation. They're not doing it because they forgot something. They're doing it probably because the SBA has changed the rules and they've required this extra. So that could happen and probably will. So when your banks come calling after you've got the loans closed, help them get the documentation they need.
Hey, Cecil, just one clarification. The EIDL loan program does not go through the bank. That's directly through SBA, whereas PPP, you work through the bank.
That is correct. SBA has a SBA disaster website that's up. If you go to sba.gov, you can get to the disaster loan, and their application is right there. And you apply directly with the SBA, and the U.S. Treasury funds that debt.
Good clarification. A lot of questions around the fact that, again, you think of the businesses here in St. Johns County and beyond, a lot of part-time workers. And just maybe, Louise, Jennifer, you could just speak to how that works relative to this FTE, full-time equivalent. Well, part-time. Talk a little bit about that to help navigate that whole circumstance.
Jennifer, you want this one? You want me to take this one?
You go ahead. I have not heard much ruling in regards to the compensation for the part-time.
Yeah, I believe what we're talking about here is the calculation of the loan forgiveness. Is that what you were referring to, Ed?
I think so, yes, indeed.
Yeah. So I'm thinking, because we are going to be looking at full-time equivalents, not necessarily head counts. I don't think the fact that you have part-time people is going to affect that as long as the FTE works out the same. And in the restaurant business, and both my husband and my son are in the restaurant business, so I know this well. You know, I know that there's a lot of part-time people, and historically you would have, I think, the same calculation on both sides. Both sides being before the loan and after the loan.
Right. And then as it carrying that forward, good question here around, so say someone goes through all the hoops and they do end up having part of their loan forgiven, but there is an unforgiven piece that does then need to amortize. Can you speak a little bit about when that kicks in, how long that is? Is there a deferment period before the first payment?
Sure, and Cecil probably can add to this too, but it's no payments are due for the first 6 months, although interest will continue to accrue after that or during that time period. I think Cecil said earlier the interest is 1%, and it's payable over a 2-year period, but the first 6 months is deferred. Now, I'm presuming, Cecil, I don't know if you have the answer for this. I don't know if any of us have the answer for this. 2-year start month period, or do you have basically 18 months then to pay off the loan?
Louise, I haven't seen the guidance on that. The way the rule is written, it says 2 years. So it doesn't say 2 years from the end of the deferment period. It says 2 years. So right now, the way it's written, and they're going to have to provide clarification, is that it's 2 years from the date of the loan, not 2 years from the end of the deferral period. Now, the thought is that the forgiveness period is going to be somewhere within that 6-month deferment window. And so if it works the way they intend it to work, most of these loans should be forgiven during that deferment period. But there's no guidance on that at all yet. That's just what we understand the intent of the law is.
And also, if your loan is forgiven, as I understand it, the interest is forgiven as well.
The interest is forgiven, and it is not. It's not a taxable event.
So it's just
the forgiven. Yeah, the forgiven portion of the loan we have seen is not taxable.
Yeah, that's a great shout out there, right? People may not know that when they get a loan charge off, that the IRS comes calling saying that was income and you have to pay tax on it. On these loans, that will not be the case.
That's correct.
Hey, Cecil, on the EIDL loans, the question here, just those are unsecured, no guarantees, right? Personal guarantees?
No, they're unsecured. I think they're unsecured up to $25,000. It may be $50,000. I'm not sure because we don't
Right.
deal with those.
Right.
There's a small unsecured portion. I think it's $25,000. Anything above that, the SBA will be requesting collateral.
So the last information that I have is there's no collateral or guarantee up to 25. There's collateral if over 25, and there's a guarantee if over 200. And when I say guarantee, a personal guarantee, which means you're personally on the hook for that.
Right. And for those of you that are considering the EDL loan, I'm going to transpose some experience in the SBA 7A program. The SBA, as a policy, does not deny loans because of lack of collateral. They deny loans because of refusal to pledge available collateral. So if you go to an EDL loan and you need to borrow $250,000, they're going to ask you to collateralize that loan. If you've only got $25,000 worth of collateral, but you're willing to pledge it, they'll take it. But historically in the 7A program, they don't deny because of lack of collateral. And common sense would say that that's the same reasoning in the EDL loans. It has been for the hurricane disaster recovery loans. These are basically the same types of loans. But those would be questions that you would have to ask the SBA counselor when you start working with them and interacting with them.
Quick question here. Does either program offer a forgivable loan assistance to an LLC with no employees? And I think we've touched on that. If there are no employees, you don't do payroll, then you don't have anything to apply for the loan for because it is based entirely on funding for payroll. Another question around, what about the state of Florida disaster loans? Anything they're doing in addition to what we've been talking about at the federal level?
Ed, can I come back and clarify that first part?
Yeah.
So, and there's a lot of confusion here. When you have an entity like an LLC, it depends on how it's taxed. So an LLC could be treated as if it was a sole proprietorship. What we would refer to as a single member LLC. You're the only owner. In that environment, that single member LLC, I believe, would apply for the PPP as a self-employed person.
Oh, under the new self-employed added today, correct.
If you're an LLC treated as a corporation for tax purposes, or a partnership, I suppose, for tax purposes, then I think they're going to have payroll. But we have very many single member LLCs, and I don't want them to think that they can't get assistance here.
Yeah, good, great point.
We have been processing sole proprietorship that are single member LLCs all week long. So they qualify, and they qualify as a business. In fact, I believe on the SBA application, it's got a number of boxes to check, and you got to check one of them, and one of them is a sole proprietorship. So that is a legitimate business concern that's out there, and it's eligible as far as we can see.
That's great. I didn't even know that you could be doing it now. I thought they had to wait till the self-employed came in. That's great news.
Any news about state of Florida DEO disaster loans?
That was a $50,000 loan program that was called a bridge loan. That money is gone. There is no more money appropriated at this time. I don't think the state legislature has done anything to act on. I don't know whether anybody else has heard anything, but I know that the Bankers Association has been working with the state to try to find out if there's additional money, but I don't think anything is developed in that realm yet.
Heard a lot in the press about some banks saying that they are lent out, that they don't have any more funds, they don't have the capacity to lend anymore of the PPP program. And Cecil, you can clean this up for me, but the Department of Treasury came out and said that the Treasury will buy, basically, can you think about when we do a mortgage? A lot of times a bank will handle the mortgage, you'll close it, but then they'll sell the loan through Freddie or Fannie or through whatever mechanism, and that allows them to free up their money to make another house loan. Well, similar arrangements are being made here, where banks will be able to offload the loan to the federal government or Treasury to free up their capital to make more loans. Cecil?
Ed, we have heard that. We don't have any guidance on that right now.
Yeah.
We've heard what you've heard, but there is no guidance. I think, and generally speaking, I think each financial institution has independently made a management decision on how they're going to handle these, what they're going to do. And, for as many banks as are out there, there's as many policies or strategies surrounding those. So everybody's a little different. There are banks that said we'll only loan to our loan customers. There's banks that say we only have a certain limit. So I think every bank is determining whether or not they're going to participate. And some banks, even who are SBA qualified lenders, elected not to participate in the program. So It's really all over the board. I think as was it Secretary Mnuchin or one of the people on Trump's staff the other day said that, and a lot of, I know it was Governor DeSantis, that a lot of this is falling back to community style banks right now. So that was a comment made by them, but I think every bank has to do what they feel comfortable with and where they can get the most. And there are a unbelievable number of applications in queue right now.
Yeah.
I don't know about other banks, but I know our bank has got, I think we maybe have been able to work a fifth to a sixth of what's out there right now, just because it takes that much time to get through them. So, I think this time last week, all of us were speculating that this money was going to be gone by the end of this week, which is why a lot of the people that were 1099 and self-employed were frustrated because they were having to wait and they thought they were waiting until there was no more money. Well, who knows exactly how much is out there, but we heard anywhere between 70 and 100 billion has been allocated so far, and that's far less an allocation than what we thought when we were on the call this time last week. I think all four of the panelists last week were in consensus that Wednesday, Thursday, Friday of this week, the money would be fully allocated. And hasn't been yet, as far as I know.
And Cecil, to add to that, on Wednesday evening, the SBA and Treasury did publish an application form for non-banks, right? So they started out with only 7A SBA banks, but realizing that there are a lot of small businesses, and sole proprietors and whatnot who are maybe, didn't have lending relationships. So they've opened things up now to a non-banks like Cabbage and PayPal and Square and whatnot. So there are now other avenues out there to people, and it's another evidence of how this is evolving quickly.
Yeah. One of the things about that, it's one thing to try to do these things. It's another thing to be able to communicate and be able to actually process. You've got to interface with the SBA's systems to be able to accurately process. And I think a lot of banks, a lot of financial institutions are struggling with the interface. This is what we have heard. This is hearsay, so it's not fact. So please, everybody on the call, this is just what the word is. But the interface is difficult. I can tell you firsthand the interface is difficult because we're pushing an astronomically large number of things through a pipe that has never been asked to handle this before. The banks are built for normal loan traffic. The SBA is built for normal loan traffic. And we are absolutely taxing the system. So if your banker is saying they can't get it through or they're having trouble getting it through, it's because there's just so much trying to pour through the system that the pipe's not big enough to push it all through.
Well, thanks everyone. Cecil, good final comment. You could see on your screen, please do continue to submit other questions to Kathy Newman. Her email address, kathy.newman@sgcchamber.com. Thank you to the panelists, and Mike, we'll turn it over to you to wrap things up.
Thank you very much. Before we close today, I'd like to encourage all of our small business owners in the audience to complete the Florida Disaster Assessment Survey online. The information collected by the survey assists the state officials in determining the damage due to the COVID-19 crisis across Florida. And on behalf of the Chamber's Economic Development Council, I'd like to thank our moderator, Ed Dwyer, and each of our panelists, Louise Anderson, Jennifer Howard, and Cecil Gibson, for sharing their expertise with us today. Today's webinar was recorded and will be available in the Chamber's Member Information Center for playback shortly. Thank you to all of our Chamber members and guests for your participation in today's webinar, and have a great weekend.